Good morning, everyone, and welcome to the European crossover webinar. And we have seen quite the sell-off in equities, equity futures, that is, and also the euro continues to go on and keep its head above the 116 area. So we're still keeping a pretty good strong bid here, and not too surprising me that we're keeping the strong bid in the sense that we could expect a little bit of a pair back. But once again, as we go into the end of the week, they're keep them still strong. Probably will see maybe a bit of a pair back at the beginning of this next week, but not too surprising that it's still continuing to keep a strong bid. I thought we probably would have maybe paired back a little bit, maybe around the 1570, 1560 area, but we're still keeping a pretty good strong bid up here at the 1609 here in the euro. Cable's still pretty firm, and Canadian dollar has made a little bit of a turnaround after charging that 33.82 area yesterday and then sliding beyond that. And we've seen peso come back. And finally, Aussie's actually starting to slide a little bit. We're still above 70 cents, but compared to what's been before, it certainly has gone and paired back. Looking into data, we did have UK retail sales that came in pretty good. Came in at 13.9% versus expected 8%. That was month over month. And as they came in very early in the session, and we've received our PMI data. And you can see French market manufacturing PMI came in at 52.6, not bad. They're expecting 53.2, but still doing quite well. And German market manufacturing flash PMI came in at 50. They were expecting 48. Certainly enough to go and keep the euro on the bid. And then looking at Eurozone manufacturing PMI that just came out, came in at 51.1. They're expecting 50. So once again, quite well. At the bottom of the hour, we will get flash composite PMI out of the UK. They're expecting 51.1, with manufacturing expected to come in at 52. And as we come into the rest of the day, we'll at 8 a.m. Eastern, we'll have building permits here in the U.S., as well as a market composite flash PMI. That'll be out at 9:45 Eastern, along with manufacturing and services and new home sales. That'll be out at 10 a.m. Eastern. And we'll just go and take a look at where, as far as indices, and you can see the slide that we've had. I mean, it's come off quite a bit here. We're looking on here on the 2 hour, and we've actually come all the way down here. We just came down this just a little while ago, down to the VWAP from the June 14th lows. You can see from back here, right there, and we found support here. Also coming in here at the 10.4 and a quarter, 10.425 here on the Nasdaq. But we have seen, once we broke that trend line, we've seen quite the slide here. Been somewhat relentless. Actually, it's been a far bigger drop than what we've seen here in the SPOOs. If you look here in the NASDAQ, Yeah, you can see here where if you look here on the NASDAQ, look how far the drop has been. Here's the June 14th lows. We've already tagged the VWAP there. And look at this on the SPOOs right here. Drop has been considerable, but not to the same extent as NASDAQ. But then again, NASDAQ's had a far bigger run to go with. And you can see we're just posted on a 30-minute, a little bit of a half hour here. And the big movie here with gold. This has really taken off. And we did see a bit of a pair back. That's one of my thoughts, is that maybe we would see the gold slide back as equities paired back. We did partially earlier in the afternoon, and then gold has since recovered. And look at us, we are just still staying strong. This we do want to go on and take out that 1900 here in gold. And silver itself has stayed relatively strong, but we, unlike gold, which has just been right up there at 1900, we did make some challenges up here at the 23.5, but we've pared back a bit. And let's just go and take a look at the news. China tensions jolt yen to a 1-month high. A slide in the dollar paused and the safe haven yen rose across to a 1-month high on the Friday as Sino-US tensions escalated after China ordered the United States to shut its Chengdu consulate in retaliation for the closure of its consulate in Texas. The soaring euro was steadfast, but anxious investors pushed the Australian New Zealand dollars from multi-month peaks, roused the languid yen from its recent range, and had the yuan under pressure at a 2-week low. Equities also fell. China's foreign ministry said it told the U.S. Embassy on Friday morning to close its consulate in the southwestern city of Chengdu, days after Washington abruptly ordered the closure of the Chinese consulate in Houston. Earlier on Thursday, U.S. Secretary Pompeo cast Sino-U.S. relations in starkly confrontational terms. If we bend the knee now, our children may be at the mercy of the Chinese Communist Party, whose actions are the primary challenge today in the free world. While Asian trading volumes were tightened by a public holiday in Japan, escalating tensions lifted the yen Japan to 106.38 per dollar. The market is taking it as a rise in tension, but it's an in-kind reaction rather than the provocative action, said Mo Sim. So there's, at this moment, of nervousness, but if stops here, the market will get used to the idea that we'll have a lot of tough talk, but short of the outright escalation in that tariff area. The Australian dollar was down 1/5 of 1 cent at the session at 70.86. It's ahead of the 1.3% of week, but also a cent below a 15-month high on Wednesday. And the Kiwi was at 66.25, just under 7-month high at 66.90. And the safe haven Swissy also hit a 4-month peak at 92.39 per dollar. Weaker than expected U.S. employment data had rattled U.S. markets overnight. Sino-U.S. ties have deteriorated over issues ranging from COVID, which began in China, to Beijing trade and business practices. Markets have been so far relieved that no flashpoint has yet prompted either side to abandon the trade deal, but are began to view it as a real risk. Elsewhere, the tearaway euro remained a little bit lower strength since busting through the chart resistance in the afterglow of the European leaders agreeing on a coronavirus rescue package. It has gained 1.5% this week, its best since late June, and 3.3% for the month. So far, it sits at 116.01, just below a 21-month high hit overnight. Sterling hung on to early gains at 27.33. Besides Sino-U.S. tensions, investors are looking to a slew of purchasing managers' index figures due across Europe and the U.S. later on Friday for a read of economic recovery progress. Focus is also on the next U.S. fiscal package, which is deadlocked in Congress, while a month-end deadline looms as some unemployment benefits are due to expire. The concern is that a failure to get this will have impact through consumer sentiment at a time when U.S. data is starting to miss the marks, said Chris Weston with Melbourne brokerage Pepperstone. And U.S. recap, the dollar hits two-year lows as U.S. economic risks mount. The dollar index cracked March 94.63 pandemic low, hit its lowest level since September 2018 after a short-lived bounce following U.S. jobless claims data. Indeed, the bounce was overwhelmed by growing U.S. economic concerns regarding raging coronavirus cases, the timelines and heft of the next U.S. pandemic relief bill, and deteriorating U.S.-China relations. The euro-dollar snapped back from its earlier dip to 15.04 and the top of the under 30-day bowl. It's traded above for a second consecutive session, extending its breakout past the prior pandemic peak at 14.95, its best level since November of 2018. The net takeaway from the U.S. jobless claims data is a recovery that will be in grave danger if Congress can't avert the pending plunge in relief support with catastrophically high 31.8 million people receiving unemployment. Essentially, really now essentially like an excuse the market just, now it's focusing on all the bad news when really it was going up higher when it didn't make any difference. So moving on through here, I don't think there's anything of any real significance. Sterling recovered its early losses that were uninspiring, mostly just riding the coattails of the broader dollar drop in London trading. And that's about it. So with that, we'll just go on and move on into the analysis. So Euro reach the bias chart resistance that we had from yesterday, 16.25, closing just below 1600. Resistance will remain the 1625 with support at 1522. So we're going to keep the 1625 and we're going to keep the support here at 1522 also. So there we go. We're still pretty well stretched up in here. If you look further back, right here, really we pretty much tagged all these little closes and touches here. All comes in. I mean, I saw a little bit higher. I think it was at 1629, so I just kept it at 1625. We haven't been able to take it out, but it's hard to fight this thing as we close at the end of the week. Now, next week, we'll probably see maybe a little bit of a pair back, and people will be happy to go and try and get long from lower levels, but we are a bit stretched here at this point. Moving on to the cable. So the cable closed right at key resistance level 2742. Remember yesterday we were talking about it the prior day about the hanging man we had, and we just posted another hanging man. We're still pushing a little bit higher here, but closed right at key resistance level 2742. The pair is stretched but remains bullish. Resistance will be 28.13. Now, in case we were to goose these a little bit higher, that's what we're looking at, that it could potentially push up to 28.13. The reason there's a little bit more room because you can see it's been trading in a much tighter range, unlike the euro that's just continued to have been advancing. We've actually kind of slowed down here and kept it in a tight range. So if we were to blow some stops, we could get up to 28.13. Not saying necessarily we will, but that would be the resistance. So 28.13, which isn't that much higher than what resistance was before. And support will be 26.25. Looking at the Aussie. The Aussie closed lower on Thursday after posting a gravestone doji on Wednesday. We talked about that previously. We did close lower here. Resistance will be 71.42 with support at 70.41. And moving on to the Kiwi. Now the Kiwi posted a bearish engulfing bar, albeit in a tight range. Resistance will be 66.16 and support will be 65.88. So although we did go lower, and it was in technically, if you look and say, yeah, that's a bearish engulfing line, but it was in very tight range nonetheless. But it was a bearish engulfing bar nonetheless. And I put 66.16, but that's incorrect. I meant 66.61. So. And support is 65.88. Let's go move into the CAD. Now the dollar CAD took out 33.82 yesterday, then managed to close above 34. Support will remain at 33.82 with resistance at 34.60. And actually, we're going to be keeping that. It's going to remain the same. Here you can see 33.82 as well as 34.60. That will remain the same. So the dollar peso closed higher on Thursday after a successful test of 22.17 on Wednesday. Resistance will be 22.61 with support at 22.26. And on to the dollar yen. So the dollar yen closed lower on Thursday, sub 107. Support on Friday will be 624. Well, it looks like we got as low as 617. But I said that 624 will go and stay with that, with resistance at 716. That would be a stretch here on that 716. So resistance at this point would come in right there. You see that level right here, 689, which is just above those here. I'm not thinking it's going to make it come back that far at all, but to say it's at 678 may be a bit of a stretch here. You see we're at 629. Well, that was a close there, or open, close and low. So we'll go with 679 here. It's definitely lower than that. And moving into the cash dollar index. The dollar index held the bias chart support from yesterday at 94.55, which will remain support on Friday. Resistance will be 95.43. We're going to keep that 94.55, but we're going to lower this down to 95.43 if we're going to turn around, but it certainly doesn't look like we will. And that will go on and wrap up the majors, and going to move on to the cross rates. And we have seen this finally pare back a bit here. Finally. And let's see here. Well, support, this is what I think eventually we'll get to, but at least for today, support's going to be right there on that close, which is going to be 70.23. And resistance is going to be this high here, high and close, which would be 70.90. Boy, we come off quite a bit. Moving on to the euro yen. Same thing, we've had nice little turnaround. This right here, this close, that's going to be the resistance, which is actually confluences with this low here. You can see it right there. And that's going to be 23.68. And support is going to be this high right there, which is 22.96. And going on to the euro odd. Finally, we're starting to pick up a little bit. Not as much as you would have thought, though. Look at that. But if Aussie's going to be weakening a bit here, we should see this move further. Go right there. It should be up here. So resistance is going to be 64.96. I don't think necessarily we're going to hit that today, but that's where we'll be looking for this market to get to. There's 64.15 immediate, but eventually we can get up to 64.96. Just a matter of whether Aussie pairs back more, but let's go with that 64.96 just so we know potentially we're going to, because we're still way, way down here. So 64.96. Support in the meantime is going to be this low right there, and you can barely see it, but look, right there, that's going to be support, which would be 62.82. And let's go into the Euro Kiwi. Same thing, things are starting to turn around here slowly. You would have thought maybe we'd even have a bigger move. But resistance is going to be 75.52. And support it will go right there. 74.24 is going to be support. And moving on to the ASEAN. Finally starting to ease back just a bit. Support's going to be the 74.97. And resistance is going to be this bar here, and it's going to be this close, which is 75.98. Actually, that was the high right there for the day, actually, 75.98. And on to the guppy. Finally starting to pare back a bit here as the yen strengthened. Nonetheless, yen has already come back a ways. You see this bar here? That would be 35.08, and that's actually where this market ran out of gas, right here at 35.08. So let's go with that. And the only reason is I'm not saying we can't go lower. It's just that I think, at least for today, we've probably pushed it from where as good as it gets. You never know, but on the run back, the close and open there, right there, 35.93. On to sterling nod. We did put in that hammer, so it looks like we're starting to turn things around, and resistance will be this close there, which would be 84.06. And support will be here, 78.60. And that'll do it for FX. We'll just take a quick look at the indices. We are coming off work at the 30-minute NAS, and we've established a little bit of a hammer. We're just gently moving off of that. Nothing spectacular, but certainly we can see this sell-off we've had. And boys, it followed this quicker moving average here. That would come in around this 10.453 area here, which would probably come in right there, 10.469. Take a look at the SPOOs. Also, something similar to hammer here, and a decent move from 32.05 to 32.12. Nothing huge, but decent there. Looking at the Dow. Certainly had a decent pullback also. Coming into some support here, holding. And look on a shorter time frame here on the gold. On the half hour, certainly looks like we want to press that 1900. And with silver, we did get that gravestone doji up here. We paired back, but it's been so volatile, and then we came back another run up in here. But resistance is going to be this 23. Looks like about 23.42. We're still well under that, but as fast as silver has moved. And that'll do it here for the European crossover webinar. We'll see you in the chat room. I'll get the bias chart posted. And thanks for joining us here on the European crossover webinar.